Level 1, the opening bell. The opening bell rings. The market doesn't fall, it collapses. Red floods every screen. Billions vanish in seconds. The trading floor erupts. Phones ring nonstop. Analysts shout over one another. Tech is down 15%. Banking is collapsing. Another circuit breaker is possible. You barely have time to breathe. An assistant rushes toward you. Investors are demanding answers. Another hands you a tablet. 3 major clients want to withdraw their money. Another voice. The board wants an emergency meeting. Then another. The media is asking for a statement. Everyone is waiting for your next move. You glance across the room. Hundreds of traders. Thousands of blinking charts. One decision from you could save billions or destroy them. You don't panic. You observe. Fear has taken control of the room. Not logic, not numbers. Fear. One trader dumps millions of dollars in stocks. Another follows, then another. Soon, everyone is selling. Not because they know the future, because they fear everyone else does. The market has become emotional, and emotions spread faster than facts. Your chief risk officer walks over. If this continues, we could lose everything. You ask one question. Have the businesses changed overnight? Silence. Factories are still operating. Employees still go to work. Products are still selling. Yet company values are collapsing. Why? Because price and value are not the same thing. Price is what fear creates. Value is what reality supports. During a crash, most people forget the difference. You won't. You walk onto the trading floor. The room becomes silent. Every eye turns toward you. Some expect hope. Others expect panic. You give them neither. Instead, you say, nobody places another trade. Confused faces stare back. One trader protests. If we wait, we'll lose even more. You shake your head. No, we'll lose more if we stop thinking. Silence. You continue. Fear makes people believe movement equals progress. It doesn't. Sometimes the smartest trade is waiting. The room settles. Breathing slows. People stop staring at the flashing charts. They begin studying the businesses behind them. Something changes. Not the market, the mindset. Outside, panic keeps spreading. Inside, discipline begins replacing fear. The crash isn't over. Not even close. In fact, it's only getting worse, and the hardest decision still lies ahead. Level 2. Buying when everyone is running. The market opens lower again. Another wave of selling crashes through Wall Street. News headlines scream, the financial system is breaking. Investors flee at record speed. Historic losses continue. Your phone vibrates. Board members, government officials, billionaire clients. Everyone wants certainty. You have none. Nobody does. But certainty has never been your job. Decision-making is. You pull up a list of companies. Some are drowning in debt. Others have mountains of cash. Some have broken business models. Others are simply trapped in a wave of fear. The market treats them all the same. That's your opportunity. You ask your analyst one question. If the stock market closed for the next 5 years, which businesses would still be thriving? The room goes quiet because the question changes everything. People stop thinking like traders. They start thinking like owners. One by one, strong companies rise to the top of the list. Healthy balance sheets, loyal customers, consistent profits. Their stock prices are collapsing. Their businesses aren't. You finally speak. We buy quality, but only when fear gives us a discount. The first trade is placed, millions of dollars. Then another, then another. Each purchase feels uncomfortable. Every headline says you're wrong. Every price drop tests your conviction. But you understand something the crowd doesn't. The greatest opportunities rarely feel safe, and the greatest mistakes usually feel popular. The market continues falling. Your portfolio turns even redder. Some traders begin doubting you. Some investors begin complaining. But you expected this, because surviving a crash isn't about being fearless. It's about refusing to let fear make your decisions. Level 3. The Investors Revolt. The losses continue, day after day. Another 5%, then another. Your fund is now down billions, not because your company's failed, because fear hasn't finished spreading. The emails begin. You're reckless. You've lost our trust. Sell everything. One investor threatens legal action. Another demands an emergency withdrawal. The board assembles. No smiles, no small talk, only numbers. One director leans forward. Our competitors are raising cash. Why aren't we? You answer immediately. Because they're reacting. We're preparing. The room goes quiet. Another director shakes his head. What if you're wrong? You don't argue. You simply reply. If I'm wrong, we lose money. If we panic, we lose our strategy. There's a difference. Outside the boardroom, the pressure becomes unbearable. Financial news channels criticize your decisions. Analysts call your strategy outdated. Social media brands you the manager buying into disaster. Your traders see the headlines. Confidence begins to crack. One senior portfolio manager walks into your office. I've managed money for 20 years. I've never seen fear like this. You nod. Exactly. And that's why this moment matters. When fear reaches its peak, logic becomes incredibly valuable. You pull up a chart, not of stock prices, of previous market crashes. Everyone looked permanent. While it was happening, every recovery looked impossible. Until it began. History doesn't repeat perfectly, but human behavior does. Panic, capitulation, recovery, again and again and again. You aren't betting on luck, you're betting on human nature. Level 4, the biggest bet. Another brutal morning. Futures are deep in the red. Markets around the world are falling together. Liquidity is disappearing. Banks stop lending. Companies freeze hiring. Consumers stop spending. Fear has escaped Wall Street. Now it's everywhere. Your research team bursts into the room. We found something. A world-class company, profitable, cash-rich, global customers. Its stock, down nearly 70%. Not because the business collapsed, because investors need cash. They're selling everything. Good, bad, it doesn't matter anymore. You stare at the report. This could become the trade that defines your career, or ends it. Your traders wait. Nobody speaks. The room feels frozen. You finally break the silence. How much cash do we have? The answer comes back. Enough for one major position. Only one. You can't hesitate. You can't split the difference. Great opportunities rarely arrive with certainty. They arrive wearing fear. You give the order. Build the position slowly, patiently, without chasing prices. The first shares are bought, then more, then more. The stock falls again. No celebration, no applause, only discipline. One trader looks at you. We're losing money already. You smile. We're buying a business, not today's emotions. Hours later, the market closes. Another terrible day. News anchors call it historic. Experts predict even worse tomorrow. But inside your office, something has changed. Not the numbers, your conviction. Because for the first time, you're no longer reacting to the crash. You're using it. The real test is still coming. Level 5, the turning point. Weeks pass. The headlines don't improve. Neither does the mood. Every morning begins the same. More fear, more uncertainty, more selling. People stop asking, how low can it go? They begin asking, will it ever recover? Your traders no longer watch every tick. They study businesses, cash flow, debt, leadership, competitive advantage. The panic has taught them something. A falling stock isn't always a failing company. One afternoon, something unusual happens. The selling slows, not because good news arrives, because there are fewer people left to panic. The strongest businesses stop falling first. Then, they begin rising, only slightly. Most people ignore it. You don't. Markets don't ring a bell when they recover. They simply begin climbing while everyone is still afraid. Days turn into weeks, weeks become months. Confidence slowly returns. Companies report stronger earnings than expected. Consumers begin spending again. Banks start lending. Investors who sold at the bottom watch prices rise without them. Now, the same crowd that screamed, "Sell everything," is asking, "Should we buy?" Human psychology hasn't changed. Only the direction. Fear has become greed. Your portfolio climbs. The companies you bought during the darkest days lead the recovery. One position doubles, another triples. Several reach new all-time highs. The same financial networks that criticized you now request interviews. The same investors who doubted you call to congratulate you. You thank them, but you know the truth. The market didn't reward confidence. It rewarded discipline. It rewarded patience. It rewarded preparation. The board meets once more. This time, the room feels different. No panic, no accusations, only results. One director smiles. "You saved the fund." You shake your head. "No, we saved ourselves by refusing to become the crowd." You look out over the city. The markets are green again. The crisis is ending. But the greatest lesson has nothing to do with stocks or hedge funds or billions of dollars. It's about people. When uncertainty rises, most people search for comfort. Comfort creates crowds. Crowds create bubbles. Crowds create crashes. And crowds almost always arrive too late. The greatest advantage in any market isn't intelligence. It isn't money. It isn't predicting the future. It's mastering your emotions when everyone else loses theirs. Because fortunes aren't usually built during good times. They're built by the decisions made during the worst ones. The screens continue to glow. The trading floor grows quieter. Tomorrow, there will be another challenge, another opportunity, another test. But you'll remember one lesson above all. Markets rise, markets fall. Fear comes, greed follows. The cycle never ends. Only the players change. And the people who understand that never see a market crash the same way again.